Hey, happy Monday, everybody. Omid here with you once again to make you smarter than the next guy. So hang in there with me for about 5 minutes, and I promise you I'll have you smarter than when you came in. What's going on in the market, you ask? Well, we were off on a pretty decent run, as you can see here. Had a pretty great few days of a pickup, and then we got absolutely sideswiped by the BS report. I should say the BLS Jobs Report, and I'll explain to you what that did here in a minute. So mortgage-backed securities have lost quite a bit of ground, and from a technical perspective, they're kind of playing around with this 200-day moving average over here. We have a couple floors of support, which is at least good news, but let's see if they can hang tight and not go any further than this. I am seeing that there's a negative stochastic coming up, so the rate trends are going to go higher. Remember, this is all in inverse. Okay. What does that mean for rates? 1 week versus the other, 7.11 to 7.17. Not a big, huge deal. We're talking about 10, $15 a month, nothing that's going to wreck anybody's plan. But again, it's that negative sentiment that's out there that we need to combat and really explain what's happening. Okay, so let's do this a little bit backwards today, just because last week there were some real big market movers. I'll remind you, last week I told you that ADP, that measures 250 million jobs, or manages 250 million payrolls, I should say, in the United States, came out and they were expecting 173,000 jobs added. The actual report came out at 152,000. So that shows weakness because we're not hiring as quickly as before. So that is the weakness is good news, if you can believe it, from a rate and bond market perspective. Okay. Now, on Thursday, the initial jobless claims were issued, and that showed an expectation of 215,000, and that came in at 229,000. So that many more folks had actually applied for unemployment benefits. So 229,000. Again, weakness for the economy. And then here comes the absolute horseshit of a report, the BLS Jobs Report, excuse my French, that we were expecting to have about 190,000 jobs creation, and they came out at 272,000 new jobs created. How can they do this? Well, they deploy this thing called the birth and death rate of businesses, and they adjust different things seasonal wise, etc. I'm not going to get into it on this short video, but it's pretty maddening what they're doing, which again shows that there is strength where it really doesn't belong. So we're getting bamboozled. Now, what's happening this week? NFIB Small Business Optimism Index comes out. That's important because this is where they survey small business owners about how they're feeling about stuff. That 10-year auction will give us a sentiment about how people feel, how bond traders feel about buying bonds at this point, which will affect what mortgage rates do. Consumer Price Index comes out on Wednesday, along with the Fed Reserve meeting starts on Wednesday. My guess is the CPI is going to come in steady as is, as no change, and or 1 basis point higher. We'll have to wait and see. The PPI, Producers Price Index, measuring inflation on a producer's level that then gets passed down to us as consumers. That comes out on Thursday. Initial jobless claims again on Thursday. This one's not recorded. Only the one in the first of the month gets recorded. And then University of Michigan consumer sentiment comes out that basically says, hey, consumer, how do you feel, right? So these are very important things. Now, what's happening? Why is this inflation as sticky as it is? We'll get to that in 2 seconds. One quick ask. Please, if you find this information valuable as you watch it every week, do me a favor and share it with at least one other person. Through education is the only way that we can get our consumers and our industry folks, realtors, builders, what have you, to be able to understand better what's happening in the market and be able to offer better advice accordingly to buyers. Happier buyers are educated buyers are happier buyers for sure. So please share this. Now, why are still prices rising in this environment? Well, eggs and groceries, et cetera, these things are all still very expensive. We are seeing some relief in the way of the cost of gas, nationally anyway, not so much all the way up here in Washington State because of the way that we tax our gas. That's a different conversation. But really the biggest killers at this point that we have no control over is motor vehicle insurance. That's up 22% year over year. Okay. Some of the other ones are motor vehicle repair. That's huge, right? And again, if we have cost of cars that are higher than normal, and people are electing to keep their cars while they're having to maintain it, and now that cost is going up, if that makes sense. Okay. On the good news end, looks like airfares coming down, minus 7.1%. That's great news. Toys down 8%. Car and truck rentals down 8%. I think that The fleet that was sold off from car rental agencies during COVID has been replenished to whatever extent. So that's showing up a little bit better. Okay, so as always, there's 100 different ways utilizing financing to make things more affordable. So don't let this stuff get to you. It's still a great time to buy because of the fact that the competition is just not as much. I think for the first time in a long time, I've seen a number with 5 figures, 10,000 some odd listings here in the Northwest multiple. I haven't seen that in a long time. That gives us about 2 months worth of inventory. Remember, real estate rules say that you have to have 6 months worth of inventory for a balanced and healthy market. So we're still nowhere near it, right? But a fantastic time to buy nonetheless. Okay? Reach out to us if you need any help. Otherwise, have a fantastic week and chat with you soon.